What's going on, guys? So last week, Friday, just remember those type of headlines that was going out. And it gets annoying now because ever since Trump's presidency, we had to realize that this was just going to be the markets are just going to be extremely news heavy and news reacted, right? But it's just certain stuff that we have to focus on now. When a headline comes out, let me try to, I think I put it in banter chat with you guys, but like now, I think moving forward, like after we see a Trump headline like this, oh yeah, it's right here actually. It says sources familiar with planning. When we see something like that, take it with a grain of salt, right? Because now it could be because what after like as of now, we understand that the tariff wars already began. So there's probably going to be a headline that could come out that says, "Oh, well, now the White House is not looking to so and so proceed in February," right? And if it's not coming from the US administration or from the White House, right? We have to take those opportunities like a grain of salt because the markets can be whipsaw with those type of price action moves. You know, if it's not directly like Trump literally tells everything on his Truth Social account. So follow that as well. And also him on X, right? Because he actually tweets everything that he's going to say. So if he's planning on doing something, it's best to hear it from him directly, or it has to actually say the source is coming from the White House, okay, to believe it. But when you see something like this, just take it like a grain of salt, right? But just with the week ahead, right? We understand that last week, Friday, there was that headline that came out that most likely they was looking to push back tariffs heading for Canada, Mexico, and China later towards March. With the reactions that we had right away, we saw dollar drop, equities pushed higher from that reaction, right? But when the Trump administration came out and said, "Hey, this is not true. Actually, I'm planning on doing this tomorrow." This is what actually caused, now if we look at the markets so far, market closed, but we see dollar strength, equities is pushing to the downside. So this is we're getting the reaction. There's nothing is new that is happening. So it's good to understand like how all of this is going on because this is a possibility at market open, right? We're going to see these reactions continue because the tariff wars happened over the weekend. So this is like, updating you guys on everything that's really happening. So pretty much we should all have a better understanding on what to expect. So we understand that Trump actually put tariffs out on China, Mexico, and Canada, right? So we understand all of this stuff that is actually happening. Also, China. But this is not the first time that tariffs has been implemented in China, right? So one of the things that they used before, right, is obviously us as forex traders, we want to take advantage of them devaluing their currency, because if this is one of the tactics that they could use to um, help benefit their economy, right, is by devaluing the yen. That could probably be the best option at market open, trading the USD against the yuan, because they're the central bank and the Chinese government is purposely devaluing their currency, right? So that they could actually level out the playing field for themselves when it comes to trade. So I think the Chinese yuan would probably be one of the best options, right? That we could just look at moving forward. Actually, what I'm gonna do is create a actual separate layout for for individual currencies like that's just being impacted by tariffs, right? So we could pay attention to it all in one platform. But as we could just see here, we could already see the actual reactions of the US yuan, right? Because we understand tariffs is going to impact China as well. We already got the break of structure. We got the breakout of this order block. We already got this breakout of structure. So more likely, it's hard to not see the markets opening in a gap and then pushing price higher. But even if we don't, if we see a pullback at any source, but obviously, if we could just start clearing above these highs, right? It's just best to be looking for continuations to the upside because everything that is happening currently, it is all inflationary too. right? When it comes to the feds, right? When it comes to the monetary policy, we understand that the last rate decision that we had, it was a hawkish pause. So this doesn't really help at all. This will help continue that hawkish pause, right? This would help continue the Feds more likely pausing rates than cutting rates, right? Because everything that is happening with physical policy with the Trump administration is also inflationary. So moving forward, right, with all of this is going on, I think the Chinese yuan is going to be a good option. We understand that how this is also impacting Mexico as well. If we don't see Mexico actually doing anything with their physical policy to help their economy like sustain the tariffs that is happening in the US, we could also see breakouts to the upside in the Chinese Mexico pair as well, right? But it's going to be probably hard at market open because it's more likely going to be a gap. But that's something that we could watch too, because even if there's not, right, if price does push lower towards a support, it is more likely we're going to see more upside in this pair as long there's no retaliations that could actually impact the US as well, even worse, right? But if all of this is continuing to go on, it's more likely to hurt the peso more than it will hurt the dollar. Also, when it comes to the CAD currency, like USD CAD is another good one just to watch what happens. I know there's a few members that's also in that already took buys yesterday. Good job. But this is another one that could continue to push higher, right? At market open, something to pay attention to, right? I don't expect people to just buy right away, but I expect you to watch the reactions because if we get the exact opposite in the future, you at least know how to take advantage of it and also take advantage of the CAD yen because if we could see all this uncertainty should help safe havens gain strength, right? And CAD also is a dovish central bank as well. With all this negativity coming in towards their economy, it could help probably force the CAD JPY to push lower as the Bank of Japan is leaning more towards their hawkish policy stance. They're already in it, but I would like the idea of trading. If you're not looking at USD CAD, you could look at CAD JPY sells. I think that's another really good option moving forward. So it's just that is really what we're going to be focused on this week, right? Is news headlines that is going on with tariff talks, war tensions, right? Obviously war tensions, but this is more trade wars. So let's see how things escalate moving forward, right? If we see that tensions is continuing, that there's not looking like there's going to be any sort of negotiation, because once we hear that, okay, Canada, Mexico is willing to negotiate with the US, that is where we're going to possibly see reversals, right? And you're going to see as long as if we see negotiations, right? We're willing to negotiate. More likely, we're going to see that be a sign of de-escalation. That's going to cause dollar to push lower. Equities may push higher from that news. Okay, but this is just reactions from tariffs. But when it comes to gold now, because I understand this is the question, I expect gold to also react as a safe haven because of uncertainty. And if we could see gold stay above 28, yeah, like 2800, 2805. If we could start breaking above structure, gold is more likely to continue higher as a safe haven. But just looking at gold from a higher time frame stance, gold is already acting in uncertainty. It's already been reacting that way this whole time. So more upside, be cautious about it because I thought we will see gold pushing higher on Friday, but we didn't. So just be cautious, wait for the breaks of structure. And more likely, moves is going to be extremely volatile at market open. So just be cautious. Opportunities is always going to come. All right, guys. So what we also going to focus on for the rest of the week outside of that is we're going to be looking at upcoming economic data. We got a lot of PMI data coming up this week, but this week is also NFP week for the US, right? So a lot of labor data as well for the US. Going to be extremely important. Strong labor data will support a stronger dollar, right? Weaker labor data will support a weaker dollar from a Federal Reserve perspective. That's why, because if we see strong job numbers, more likely the Feds is going to keep rates at high levels, right? They're not going to cut rates. Stronger dollar, weaker equities from that standpoint. But if we see labor data starts taking a hit, more likely we'll see a weaker dollar, stronger equities, as that would increase the odds that the Feds more likely will cut this year, right? So something just to pay attention to. And then also we got the Bank of England's rate decision on Thursday. So that's also going to be a really good focus Moving forward towards earnings. This is a heavy week, man. Planter is coming out. This is going to be Monday after market close, but definitely the focus is going to be on Google. We're going to see Amazon is going to be the main focus of this week. You know, we got Walt Disney, but Google and and Amazon is definitely going to be important for the Nasdaq. So pay attention to that when that comes out, because I don't expect earnings to take a hit, right? But you never know. But as long as earnings continue to do very well, I don't expect sales and equities to last long term, because everything that is revolving around the US economy from a data perspective when it comes to growth is still strong. So higher time frame wise, we are ranging at the highs, but I can't see the market shifting to a downward trend as of yet, because we don't have enough confirms for the markets to anticipate that moving forward. It would be more likely if we start having recessionary fears, if we see labor data start actually showing weaker numbers than expected, or if we see that the Federal Reserve switch to hiking rates this year, then that will probably cause the equity markets to shift in a downwards turn, right? Or maybe if tariffs actually gets worser than expected, right? Get worse than expected. So that would be another reason for a shift in equities. But every time we start getting a lower, we form a low, to start expecting a high, highs to continue to play. But as of now, the focus is going to be tariffs. So I expect the markets to react to tariff fears. So that should be the focus until it's not the focus, not any longer. All right. And a quick update now, the Federal Reserve is back from their blackout period. So we're going to get a bunch of Fed speakers coming out this week. More likely, we're going to see Fed speakers talking about tariffs, talking about how Trump's policy can impact monetary policy, growth, and so what. So headlines, I think news wise is going to be extremely important for the markets, guys. So I will update you guys in the market updates tab, but pay attention to the news feed, pay attention to both of them when those headlines come out, so you just don't get lost. All right. And that's pretty much it for the market update, because I want you guys to get this before the markets open, right? And I'll see you guys for London. All right, guys. So remember, market open, more likely we're going to see dollar strength. We're going to see probably equity downside. I will focus on, let's see what CAD does, the peso does. Let's see what the Chinese yuan do. If you guys take trades, like, be very cautious, because it's a possibility that if you try to take a trade and, say, for instance, it's a possibility, like an example, what could happen is, because you're going against algorithms, right? So market open could be up here, right? It will open up here at 21, and you take a buy, like, possibly, yeah, when everybody's coming in, you could probably see a little bit of rise. Is a possibility too. But then what happens if you're at the high and then price just comes back down? Most people's accounts can't handle the pullback, right? So that's why it's very tough trading market open because of that. But it's hard to ignore. I know it's like free money in your face, right? So I know it's very hard to ignore, but try to be smart about this. Use proper risk management. Hopefully this helps, guys. If you guys have any questions, man, this is going to be a crazy week. But if you have any questions, don't hesitate to reach out.